Today I'm going to look closely at gold and just show you the way that I actually analyze a chart, and hopefully this will allow you to make better trading decisions as well. So the question is, which way is this market going? Very easy way to look at that is look at the last couple of days and simply put a line on a low and just do that, and that tells you that the direction of the gold market is upwards. And that doesn't have to be perfect, just a general idea is the gold market's going up. So if I also ask the question, how high do you think it'll go? Well, there we go. We've got a rough sort of line. If gold goes up to there, it's possibly not going to go much further. Of course, it could just spring through it, but the probability is that it might just touch that line and then come down, but it will certainly beat that high. Now, I made a very interesting pattern matching algorithm, which if I go on to the 30-minute, it should, if it's behaving itself today, give me the likely direction of the gold market. And what it's suggesting is it's suggesting that the gold market is going to go up. And as you can see, the high is actually beating that high, and I'd agree with that. And then there's a little bit of a retrace, and then it continues on its merry way. And the cool thing is, it gets to the top of the trend line. That's interesting. But the more interesting thing is, why did gold bounce from this level? So here's a 1 hour chart of gold, and what you can see on the chart is simply liquidity levels. Now, liquidity levels are not support and resistance levels, although they do act as support and resistance. They're a different animal altogether. And the great thing is, I couldn't be bothered marking them myself, so I designed an indicator to do exactly that. This finds liquidity levels, and that's why gold bounced at that level. Quite simply, it's in a liquidity area, and the chances are that it's going up to the next liquidity area. And you might ask yourself the question, where is that liquidity area? Well, that liquidity area is actually already drawn by the indicator, which is really handy. I don't have to think anymore. And it says that the likelihood is that we might hit a top around 4931 to 4950. So that's great, because it's above that top, and that is where my target would be today. So I think that this trade, I don't know if we retrace down, but if we go up from a standing start to here, that's still 1,100 points. And the risk on that trade is very, very small. If you can get in on a little pullback, and that's another thing that this indicator is so wonderful for, it actually tells you where your support and resistance, or rather where your liquidity is. So at the moment here, we've got no liquidity showing up. Have a look on the 15-minute. I can see a level that I would like, but let's see if we've got anything on the 1 minute. That's very nice. We have three liquidity levels. We've got this one here. Let's mark it. So I'm going to mark that. And we've got that level there. So those are two liquidity levels, and then we've got the primary liquidity level, which is where I don't think it'll get. But these are the two levels that I'd be looking to buy gold, and you should be able to get into this trade with a relatively tiny stop. Usually I go for the middle of the level, which would be there, and I put my stop there, so about a 7-point stop there, and this one would be about a 7-point stop as well. So I'm looking at using a 7 to 10 point stop, and my target is 1,100 pips. So we come back at the end of the day and see if I've hit the target or whether this was a pipe dream. Well, I wish everyone a great trading today. If you're interested in the indicators, drop me an email at helpmetradenow@gmail.com. Before I go, I just wanted to bring your attention to something that I've seen in the chart here. You see this little black candle that we've got sitting here between this two expansion points? That also can be a very interesting level for the market. So I'm going to actually mark that. So I'm marking the top of the body and the bottom of the wick, and that is also a level that I would be looking to trade gold at today, around about there. Now, we don't know which level it's going to be. Doesn't matter. We don't have to know, because what will happen is when price comes into this level, it will actually show us I'm going to react off this level, or I'm going to break that level. So you can, if you want, if you've got small zones like this, you can use very small stops. But if you're like me, you want to see some form of reaction, some candle structure that's telling you, yes, this is going to be a reaction zone, and yes, I'm going to fly out of here. Well, the upside potential is huge and the downside potential is very little. So I wish everyone a super trading day. Thanks for listening to the video, and please like and subscribe, because that just helps the channel. Thanks guys, and good luck.